Welcome to the DMBA podcast, where we share business confidence with the design community. Today with me are Franz and Tom. Hey Franz, hey Tom.
Hey guys.
And today we're doing another business design teardown, which is a format where we take a cool brand or a product, something that design community loves or generally likes, and then we look at the business behind that product or service. Because we want to see if this is just a fancy design, fancy service, or is it a fancy business as well? So, Tom, which company are we tearing down, and probably literally tearing down today?
Yeah, and we won't be the first to have torn down this one. Doesn't need much introduction. Today's company is WeWork. And unless you've been living under a rock for the last 10 years or so, you'll have heard of WeWork, the famous co-working company that had ambitions beyond co-working that were kind of tempered, shall we say, and we'll get into that. But yeah, a co-working company, enormous, had an incredible growth cycle, and also an incredible crashing as well, and has now become something of a cautionary tale in startup land. I'm sure we will pick over some of that today. Countless documentaries, books, dramatizations have been put together for this company. You've probably, if you've listened to this, encountered some of those before. But yeah, started in 2008 by Adam Newman, who has become kind of the famous, one of the most famous and infamous founders in recent history, to be sure, and an architect called Miguel McKelvey. They met in New York. And actually started a co-working company called Green Desk before WeWork. That was the sort of precursor to WeWork, which was a kind of eco-friendly co-working space. And the money that they made from that went on to allow them to start what would become WeWork. And it's probably worth us starting off by just defining what we mean by co-working. Because WeWork in its early days, I think, was trying to build out a particular flavour of it, and it's now become a bit more conventional as part of the work that happened kind of post-2018. But when we talk about co-working, what we mean is a physical space that is more flexible than a traditional office lease. So typically a building that's been the lease has been bought by a co-working company. They then slice and dice it up into more flexible workspaces. So hot desking, where you can come and pay for, say, a day to come and sit anywhere and work, or you might have a small office or a whole floor within a building, and you will pay different amounts depending on what kind of access you want. Do you just want a few hours a week? Do you just want a day? Do you want a whole floor? So that's what we mean by co-working. And different companies have different kind of unique selling points when it comes to theirs. So yeah, we're going to, as always, get into the business model, the strategy with Franz, getting into the numbers with Alen as well. And then finally kind of wrap up with the threats and opportunities for WeWork moving forward in an area that has grown enormously in the last 10, 15 years. So we're going to start it off, chaps, by asking if either of you have been to a WeWork yourselves, or do you use co-working much? How has WeWork compared from your perspective?
I've never been to WeWork.
Right.
I've been to many co-working spaces, and I finally decided that I don't like it. DMBA is a remote company, so we all work from home. And after having worked in an office for a while, I did miss company. So I went to co-working spaces, but then I realized that you don't really know these people. Yes, there is sometimes a community, so you can chat, but also, it's never going to be super close like your colleagues. At least for me, it wasn't in all the co-working spaces that I went to. Secondly, I just couldn't work in like crowded spaces. I know that my office before also had a bigger office, and I was one desk with many other people, but it was a difference when all of them worked in one company, in contrast to everybody working in a different company and everybody talking about different stuff. So this is why I didn't like working there. But honestly, the biggest thing that made me not want to go into co-working spaces is my shift from not liking to work alone at home to loving to work from home alone. So by now I love being alone. I love going only to meetings when I have to. I love to be able to be concentrated, put my head down, and then have my social contacts after work. So I really, really enjoy not sharing a space with people.
Just hates people.
Yeah, that's not what I'm saying. I'm just saying I like to work alone.
No, I'm joking. I'm the same, and I'll come back round to that in a bit in a moment with my sort of experience of co-working, which does match very tightly with yours, Franz. But Alen, been a WeWorker even? Have you used co-working much?
I've been to a few WeWorks. I believe Berlin, maybe London and Munich, and I did like it. I mean, I've never been a member, but I did just visit someone, and it always felt like a nice open architecture. You know, it had a nice feeling of a cafe where you can work, but I never really worked there, so I can't speak to that. But I did. I was a part of another co-working space in Berlin called Factory. And that was back when the membership for Factory was just 50 euros. That's like $60. And for that price, you basically had a hot desk, which is an unbelievable price, by the way. And I remember 2 years into me being a member of that space, they raised it to 150 euros, $170, something like that. And there was a huge riot among people, even though it was very obvious that this needs to be done because with 50 you can't make it work. But we'll talk about the business one later. But yeah, the way I used the Factory was basically like my second office. So it was just a way for me to change the space when I needed it to change. And then even when I used the co-working space, I used it as a library. So I wanted to go in there and just work alone, but be among people, but not, like be there to socialize as such. With one exception, there was a really nice table tennis table. Yeah, tennis. Yeah, of course, table.
Ping pong table.
A ping pong table, exactly. Thanks, Franz. There was a colleague who I always beat, so I loved going there just to get my ego up if I had a bad day. So that was another reason to go there.
Wow, I'm looking forward to one day taking you on, Alen. I reckon could be a good little DMBA matchup.
Ping pong match.
Maybe.
Are you good?
I don't like to, talk about it. No, I'm terrible, actually.
Okay.
I had a contract recently with a similar thing, and I'd always get spanked. But I do enjoy it. And my sport prowess
then I would love to do
my
it.
ability. Yeah. I'd love to beat you.
In this case, I'm happy.
Kick your ass. That'd be great. Interesting. I think I'm coming from a very similar space. I don't know. It's a bit of a cliche, isn't it, that a lot of designers are quite introverted, and I'm not necessarily projecting that onto both of you, but I consider myself an introvert, and I've worked at a lot of co-working spaces. Brighton, we've got quite a few, and I've tried hot desking. Really didn't like the uncertainty of whether I was going to get a desk, the noise, working from a small screen. Ended up getting like a permanent desk, but still within the co-working space, and just found the noise unbearable. The distractions, like many of us, I'm running a lot of client calls and workshops and training remotely, and it would just stress me out too much. So I actually now, the room that I'm in now is in a co-working space. So I now rent a really small private office within a wider co-working. And that for me works really well. Because I've got a nice home office, but there's something about getting out of the house, the exercise, when I want to be around other people, I can go for a wander. I can go and sit and do some emails in the cafe area, and that I like that feeling. I like that buzz. But I can go just shut the door, come in here, and I know I've got privacy and no distractions. So, I think the only mode of co-working that works for me is the solo one.
Not co-working.
Not really co-working. Just having it in tiny little, little micro bursts of other people, but I don't really want the community aspect of it as things stand, which is terrible to say because they do a really good job, particularly where I am now, of fostering that. But that is a big thing people want, right? That is one of the big selling points of co-working is that community piece, if you want it. So,
Interesting.
So, there's lots of other ways that co-working can be useful, like meeting rooms and things like that. So we're kind of moving into the sort of business model strategy side of things. So I'm going to hand over to Franz to kind of start taking us through some of that stuff.
Sure thing. As always, I'm going to be talking about strategic decisions that set the company apart from its competition, made it successful. Obviously, in this case, it didn't only make it successful, but also led to a crash and still going on. So I have a little story prepared, which encompasses 3 chapters.
Okay.
I love stories.
How long have we got?
Chapter 1, Takeoff. Becoming the highest valued venture-backed startup in the US, which is what WeWork was when Uber went public. So after Uber going public, WeWork was the highest valued startup in the US with a valuation of 47 billion. And I mean, how did it start? And the interesting thing is we always talk about these things so naturally, right? We just talked about our experience about co-working and how we liked it and how we didn't like it. But again, remember, this company was founded in 2008, 2009. Co-working was not a thing back then. So we're talking obviously about the biggest first strategic decision, which is a good timing and exploiting a current market trend. And everybody who is old enough to have lived through 2008, 2007 financial crisis, raise your hands.
Yeah.
You're going to remember what happened. So I don't want to go into financial crisis here and why it happened and how it happened, but let's all remember what happened in the end. And it was a lot of people losing their jobs, having an economic crisis, companies closing offices, or even shutting down for good. And this is exactly when WeWork started. And it started together with the birth of the gig and sharing economy. So Uber was founded at this time, Airbnb was founded at this time, DoorDash was founded a little bit later. So all of this sharing economy, all of this gig economy, also freelancing, was what basically boomed or even like started at this point in time. Because also companies obviously hesitated to hire full-time people and rather relied on temporary workforce. So this freelancing thing just really started to get going at this point in time. And just in general, startups boomed because after an initial contraction of the whole financial market, money was super cheap. So there are a lot of people who got unemployed, founded companies, needed office spaces, and that just created this big market opportunity for WeWork, which they realized and capitalized on, right? So they realized that this trend was there and created offices for this new generation of workers and companies. So they basically, I mean, I'm not saying co-working wasn't there at all, but what they did was making co-working big and scaling it and having huge open spaces, collaborative areas, hip and fresh atmosphere, not only having an office, but as you said, Tom, having also a community, really focusing on this community and not only selling the space like traditional office companies did, but also sold this experience and sense of belonging to a community. And both of that combined with a really, really great branding, right? If you were at WeWork, you were not working, right? You didn't have a job. You were living that dream in these fancy spaces with full fridges and pizza and a rooftop and everything flexible on monthly contracts and a great community. So this value proposition was really framed around this new wave of how people work after this crisis, basically.
Yeah. And, but, you know, design, big part of that, right? Like you said, the design of the space, the design of the experience. You mentioned co-working had been around. I'd used co-working back in the day, and it was just like being in a big open plan office, didn't have all the bells and whistles. But you look at what WeWork did architecturally, like just separated itself enormously. And like you say, all the perks. Some of them a little weird, some, you know, DJs and hot tubs and all that kind of madness. But
they had hot tubs?
Some of them did apparently early doors. I was kind of looking up weird facts about what some of the WeWorks had, and there was pretty interesting stuff. But yeah, it all looked very good as well. If you were a startup, you know, kind of working in that kind of atmosphere, a lot of it may be a little superficial, but it definitely got people through the door.
Absolutely, and basically, WeWork was renting out great office spaces, right? That's what they did. But now, next step, right? Strategic decision. Early on, they made a decisive move. They somehow managed to convince investors that they are a tech company. So if we now talk about what WeWork does, everybody says, they're renting out offices. But what they tried to do and what they actually did is they sold themselves to investors or to the world, not as a real estate company or as an office company, but as a tech company. And in hindsight, that sounds ridiculous, right? But now we are in the chapter 1, right? How it all became successful. And that was a key feature of their branding towards investors. They preached over and over again that they utilize very sophisticated data analysis to create optimal workspaces, and data helps them to design their great workspaces, and they have this internal software that lets them understand how people use the spaces, and this helps them to optimize occupation, and also helps them to find out where to build the next spaces, and all of that was basically hyped in a way that they portrayed and sold themselves as a tech company, which means that they were also able to kind of get investments like a tech company, right? Because a valuation of $47 billion dollars is not what you typically expect from a landlord. But that was one of their game to actually make it on the list of huge investors.
I have a good quote for this one. So one of the journalists that I found in the research said, Adam, so the founder of WeWork, had a quality to convince investors to look at a pigeon and see a swan.
Wow, great quote.
And so these people were Goldman Sachs, JP Morgan, SoftBank, Amazon, Ashton Kutcher. It's like all of these people invested into this, right?
Mostly very sophisticated business decision makers and investors.
Exactly. And with being able to get tech-like investments, they were also able to drive tech-like expansion, right? So very early on, they focused on radical growth and radical internationalization. At peak, they had over 800 co-working spaces in 123 cities in 38 countries. Crazy. And I mean, this sounds big, but there's a nice comparison that I read. They were the biggest office occupiers in London and New York.
That's crazy.
Like, imagine that.
I think they still are in many of these cities.
I think in Manhattan, definitely.
Yeah, it could be.
Crazy.
So, crazy thing, right? They were like expanding like crazy with this money that they also partly got through, portraying themselves as a tech company. But interestingly, again, this helped them to go the next step, which made it possible for them to be successful, which was focusing on corporate consumers. So corporates basically renting out offices. So in the beginning, target group was basically freelancers and startups. But also, as you know, as a company, you'd rather rent out something to not to one person needing one desk or needing one room, but to a company that maybe needs a floor or half a floor or some offices. So now that WeWork had this name and this brand of, hey, we are this forward-thinking company, and everybody who moves something in this world somehow works in WeWork, and this is where work happens. That also helped them to attract these big corporate clients. So they also valued this flexibility of the leases. Obviously, it was just quicker and cheaper and more flexible than renting their own offices. It was hip to be in a WeWork, and by 2019, 40% of their members were actually enterprise clients, which is pretty good, because usually enterprises, they enter in longer term leases than you would get from a single person, right?
Mm-hmm.
Yeah. And last step, and now we're already in 2019, was
That's the last chapter now?
No, that's the last step of the first chapter, Alen. How much time do you have?
Okay. I don't know. I just thought I missed the second chapter, so I wanted to ask you about it.
No.
We have enough time, Franz.
We're still
tell
in
the whole
the
story.
being successful phase, and
The
now we're
takeoff.
in a
Okay.
phase that is super, or now we're with a step that is actually quite smart and visionary. We all know how it turned out, but that was the one positioning the company not only as a co-working company, but as a conglomerate that could handle all aspects of people's lives. So they rebranded from WeWork to the We Company. Obviously, they still had WeWork co-working, then they had We Live co-living, and then they even had We Grow, which was a private elementary school in New York with a tuition of $22,000 to $42,000 a year.
Sheesh.
Yep. So again, super smart step. Now, always smart with this in this time frame, right? Super smart step. If you want to portray your company not as a, hey, I'm renting out office spaces, but hey, I am a tech company and I am doing more than being a landlord. This was a super smart step to double down on the notion that, yeah, WeWork was more than a real estate company, a tech-based, lifestyle-oriented, future-directed brand that basically covered the needs of how people live and work in the future.
I can't believe we got to the 23rd minute and nobody said their tagline, which is they were there to elevate people's consciousness, right? Wasn't that their tagline?
I can't even remember that.
Yeah, that was kind of the vision. So they started with the WeWork, and then they started expanding into all these adjacent things such as We Live and so on.
Yep.
Because the idea was we're not just an office space company, but this is just the beginning of how we get people together, and then we use our magic, our culture to actually create and add additional value, which is raising people's consciousness, and through that we generate all these value. So that was basically the pitch to investors.
Yep.
You know, this is not just a space, but it's a soul that generates a lot of value.
Yep.
Super ambitious, but obviously hooked in
And
a lot
that's
of
it.
people.
Now buy, hold, sell. No, just kidding. Because now WeWork crashes.
Before we talk about that, I was wondering, because you mentioned, if you don't mind, you mentioned
Sure,
about
sure.
how they'd used this strategy of moving into other areas of people's lives in order to be seen as a tech company. Obviously, that contributed to that enormous value, that enormous valuation. Are either of you touching on comparing that to like other co-working providers like IWG, because I don't want to. Okay.
I'll go into that in the numbers.
One, I think, as far as how did they get to that valuation? Cool. Look forward to that. Yeah. Sorry, Brad.
But let's put a pin on it and come back to it. But it's an interesting story.
Sorry, Franz. Carry on.
All good. Okay. Ready for the crash?
The crash.
Yeah. Actually, I imagine this to be a longer story. So I was researching. I was like, okay, what were the decisions that led to this crash? Actually, nothing led to this crash. It was basically just one single event, which was they wanted to go public, which means until 2019, WeWork was fully private. Nobody had access to their books or finances except for their investors. And as I already said, they all believe that it's a tech company with a soul and creating huge value. But then when you intend to go public, you also need to file paperwork. So basically you need to go public before you go public if you want it like this. You just need to turn your company inside out and show everything that you've done and all your books and all your finances to the public. And it's not that they made some mistakes when doing this. It was just like they just turned the company inside out, and then they lifted their skirts, and everybody was like, "What? This is it?" So nothing happened. It was the same thing as before. There was no big mistake. There was no weird thing. It was just everything that happened in the last 10 years, or let's say 4 or 5. I don't know how long the books were dated back. Everything that happened in the last years was just all of a sudden public, and then the bubble burst. And that was so interesting to me, that it wasn't like, they made all these good decisions that led to that, and then they made some not so good decisions, and then it led to a decline. It wasn't like this. It was like all decisions that were thought to be good, and then they lifted their skirt, everybody looked at the inside, and people were like, nope, we're not buying this anymore.
There was one particular thing they wrote in that paperwork that raised eyebrows. And this is like, obviously, when your company is not profitable, you use something called adjusted EBITDA to try to show, okay, this is not our real loss, and we will adjust our loss so it looks like it's less than it actually is. But they have something they called community adjusted EBITDA. So this is a completely made up KPI, completely made up metric, which is something that you can do, but it's really frowned upon, especially in the finance world. Like, there are metrics that have been used for years, decades, and they're just there so you can compare companies. And they just came up with community adjusted EBITDA, and you couldn't really know what it is because the definition was not also well thought through and written. You could just guess. And, that was a sign to people like, do these people know what they're doing? Like, are the people running this company also trustworthy enough? Can we really trust a company? Because if you actually go and look at these paperwork that they filed, it's really uncommon for a company going public to file that type document that looks like that. It was like nothing that people usually see. It wasn't like serious document. It was like, because we're elevating people's consciousness, we're also going to raise the consciousness of investors and do this document differently. And that felt like almost a joke.
People realize these are not serious people. Yeah. There were no adults in the room.
Exactly, yeah.
Okay, so you want to know what the big reveals were? What information was, let's say, mildly put, shocking?
I think one of these might be one of my quiz questions, which I thought might get covered by now. Yeah, go for it.
Nah, I'll start with the obvious one. Huge losses.
Huge.
Like, huge losses. And now, question for you, Alen. Do you want to cover it, or should I stay at huge losses?
Go for it.
Okay. Okay, huge losses. in 2018, WeWork had a revenue of 1.8 billion and a loss of 1.9 billion.
It's a 1-to-1 ratio. That's usually not good.
So yeah, they're losing more money than they are even making. Yeah. In the first half of 2019, when they planned to go public in the end of 2019. In the first half of 2019, they already had lost 900 million. So almost $1 billion.
Sick.
And if you calculate this with every sign up, they would lose $5,000. So $5,000 per new customer.
Investors were subsidizing you to be in the WeWork. So for every $10 you paid, you were actually getting $20 of value.
Yeah. So yeah, that became apparent. So imagine you're filing or you want to go public. You're opening your books and then you're like, yeah, 1.9 billion loss.
And I don't know if those like documentaries and series are like good representations of how these people thought that were, so Adam and others around him, but it also seems like they were oblivious to the fact that this is bad. It's like, this is pretty bad. Like, why would you go out and try to go public at this stage? It's not a good story.
Yeah, didn't make sense, because usually that kind of tactic, enormous. We see this all the time in tech startups, right? We've seen it in Uber, and we talked about it previously. You're usually just trying to eradicate the competition, right? We can use all this money just to completely eradicate anyone else, but they weren't at that stage in the journey. And this is we might touch on this a bit more. And this is a very easy to copy business model as well.
Yeah, exactly. As you just said, usually that can happen, right? You're running huge losses for growth, and after that you're monetizing on this and you try to turn your company profitable. As we said, WeWork tried to convince everybody that they are a tech company, but with these filings everybody now also understood that WeWork is a landlord company, and that the business model that they're running is highly risky, and that everybody realized that it's not a landlord company. It's not a tech company. It's basically a highly inflated landlord with a huge risk in their business model, which comes from the model that they used to run. Like in general, the general logic of the business model is we rent office spaces for 15 years, and then we rent it out short term, slice it up, and make profit with this. But what you're basically doing is you're betting on hiking property prices. So you hope that property prices go up and you basically win with your 15 years lease. Then you're betting on low interest rates. And just remember, at this point in time, interest rates were close to zero. So you're betting on low interest rates, and you take this money to invest now. And then you're betting on high occupancy rates, obviously, because if your spaces aren't filled, you can't make money. And the view of most investors was that WeWork wouldn't survive if any of these factors go wrong. So if just interest rates would rise, they would not be able to make ends meet anymore. If property prices would lower and it would be cheaper to rent somewhere else, again, they would go completely under. Actually, that's the wrong way of putting it, because obviously they weren't profitable now, but now it became apparent that this is not a business model that would be profitable anywhere close, right? Because this is a 15 years lease that they're entering, and their business model is taking this 15 years lease, slicing it down in smaller desks into smaller time frames, and then selling these smaller, let's say, spaces and smaller time frames for a premium to others. But the risk involved in this, in this time span is just mayhem, and everybody saw that now. it was just clear that a landlord company won't ever be making explosive growth or returns like a tech company. So that was number 2, right? So number 1 was huge losses currently. Number 2 was huge risk in the business model, not future-proof business model. And number 3 was, let's say, again, mildly put, questionable management decisions that completely eroded the trust into the founder, Adam Newman, right? And here I decided to make a game, because if you read these management decisions, you're like, no, he didn't. I just want to remind you, he was not charged for any of these. So all of what he did was legal, right? But when you read this, it's like, how? Like, how is this possible? So what we're going to play is fact or fiction. Was this a management decision made by WeWork, or is this fiction?
Cool.
Nice.
Are you ready?
We're ready.
Yes.
Okay, so management decision number 1. The company loaned Adam Newman $7 million at an interest rate of 0.64%, so below 1%.
Mm-hmm.
And Adam Newman used parts of this money to buy property, which he then rented out to WeWork above market value. Fact or fiction?
I have a feeling I'm going to say fact to all of these because nothing can surprise me. But I'm just going to say fact.
All of them are going to sound like they could be fact based on how wild this guy and WeWork were. I'm going to go fiction just to be, keep it interesting.
Yeah, I thought about changing the percentages a little bit, but actually, that's a fact.
That's insane.
Fuck.
He loaned $7 million below 1% interest rate to buy property, which he then rented out to WeWork above market value.
How is this legal?
Wow.
I mean,
it's not.
It depends on how much away from market value it is. If it's slightly below market value with the interest and slightly above market value with the rent back, it's eyebrow rising, but not illegal. If it's like you just rent it out for 3 times, then it is illegal. But
Isn't
it was
something
still
about you having, as a CEO, having the best interest, making the decisions that are the best interest of stakeholders, or in this case, like equity holders, because this doesn't seem to be one of them. But yeah, I know this is not a legal discussion now. It's just like, wow.
Makes you quite angry, some of this shit, doesn't it?
Yeah. I mean, luckily, this wasn't for stakeholders yet, right? No public, one person, Tom Pryor bought a stake and then he was ripped off by such a dude. It was still investors, but again, there were real people working for this company, and they also suffered from this behavior, right? So that was one. So we were playing a fun game, right? Obviously, if you were with WeWork at this point in time, this was not at all fun. But let's continue. Fact or fiction? In every single WeWork location, Newman had a private 120 square meters flat with a private chef.
I think that's fiction.
That's
I think
too much.
not even he, but that's a lot of chefs.
800 private chefs. I think this is fiction.
If this is true, then I am quitting the tech world, because it's just, this shit is mad. It's bananas.
And we're stopping the recording.
Yeah.
Yeah, you're right. Okay, I drove it too far with this one.
Maybe you should have said half locations.
Okay, with a chef traveling with him to every location.
That would have been more believable.
Yeah, that would be better.
Yeah.
Okay. Okay, next one. So you remember that it's now the We company, right?
Mm-hmm.
Fact or fiction? Adam Newman privately trademarked the word we and licensed it back to the company for almost 6 million euros.
This is true.
Man. I also think this. I have a feeling I've heard this. I think it's true.
Yeah. I mean, when I heard this, then that was the point in time when I thought of the game Fact or Fiction because I was like, no.
That's
No
mad.
way, man.
Oh, like
Really,
seriously?
That is actually, that was one of the quiz questions.
Okay.
Like, can you believe it? Yeah, absolutely insane.
Yeah.
And I think this was disclosed in those papers
Yes.
that company had to publish when they wanted to go public. And that was one of those like super big red flags
flag.
for investors. Like, are you serious,
This guy
Adam?
for real.
Yeah.
Yeah. Nuts. That was fun, Franz.
I have another one. One
you got
more.
another one.
WeWork invested 33 million in a startup that makes artificial waves because Adam is a surfer boy.
This is true.
I think it's true. Let's see. Is it?
This time I made a pitfall for you because it's not 33 million but only 13 million.
Only 13. Okay,
Yeah.
that's a good deal.
And
Yeah.
just to say, we now only have 2 quiz questions from me. Might have to put a ban on quizzes in
we
your
need to.
segments, but yeah.
I mean this story has like so I even have I'm not gonna ask the next one but I even have one more quiz question but let's not.
No, go for it. Go for
No,
it. 'Cause
go,
we might
go.
be able to skip
Yeah.
mine now.
Okay, fact or fiction? I can already tell you it's fact, but that's another one. Like, he proposed a governance structure that gave his shares 20 times the voting power of ordinary shares.
And that was true, was it?
Meaning that if he sold shares, which he did before the company went public, he would still have the controlling stake.
Crazy.
Did he, in the end, have 10x?
No.
So he had 10x, but he wanted to have 20x voting power.
Yeah, he wanted. I don't know how much.
It ended up going way down. He really, he realised. I'm sure we all move into. They had to stand down, and those voting rights were massively curtailed.
But actually, this game, I have another question for you, just to keep playing. I just came up with it. So, fiction or fact? Is WeWork still claiming to be tech company or not? I need to phrase it differently. WeWork is still claiming to be tech company. Fact or fiction?
I'm going to say fiction. I think it's got much more sensible leadership in its now, but yeah, maybe not.
Franz?
Yeah. I would also say that there was maybe even one decision they had to make to still be alive.
Yeah, I consciously made it a little bit more dramatic than it is. I don't think they're claiming that they're a tech company anymore, but I read their proxy annual report and they talk about their digital products. And I had a look at their digital products and they don't seem digital to me. So, for example, they talk about... Did you want to talk about that, Franz?
No, go on. I didn't.
So one of their products is called All Access. And what All Access is, it's basically you having access to co-working space near you 24/7. So to me, it's basically an app, right? But it is still renting out space. So it's weird that they still try to portray or frame certain services that don't seem to be actually digital as digital. Because what would be digital is, you actually having just an app and renting out space of others. But if you're renting out your own space, then this is just an app that helps you rent your own office. Yeah. So unless I'm mistaken, this is not really a digital product.
I guess in that vein, would you consider Uber a digital product? Because it's the same concept, really.
No,
isn't
but
it?
they don't have their own cars. That's the big difference.
But is this not an app where WeWork don't own the space that would be being rented out? So this is if you are a company that has some spare space, you can use this app to rent it out.
Say this again. So, I mean, they're renting out their own space.
Oh, it's their own space. I thought you said it was like a third-party thing where they could be used to rent out rent out some spare space that you have in your own
If
building.
I'm not mistaken, it's access in their select locations.
Okay, fair enough.
Yeah. Bring us closer to the turnaround. What are they doing now? But just to end up with the crash chapter. So this all started mid-2019 when they filed these documents and all of these financials and also these management decisions actually came to know to the general public. And the result was actually Adam Neumann being forced out of the company. The value dropping from $47 billion to $5 billion, 80%. SoftBank, their biggest investor, having to inject another $5 billion rescue investment and taking over control of the company. And yeah, from going public soon to not going public anywhere soon. So basically indefinitely postponing the IPO. Yeah, so that was it with 2019. And I was asking myself, honestly, how are they still alive? Like, how is this possible? And this is now chapter 3. How are they still alive? Well, they're still alive by basically getting real and capitalizing on what they already have and using this huge investment that they already got. So, as of my understanding, they went from tech orientation, hyper growth to, well, a real estate company with rigorous cost cutting. So the first sign that they refocus their effort is who their new CEO is. He's called Sandeep Matrani, and he's basically a real estate veteran. So basically they got somebody who has decades of experience in the real estate industry, which shows who the company should be in future, right? They completely terminated everything else than co-working. So co-living is dead, and also We Grow, the school, is closed. They had 2 rounds of layoff. The first round of layoff was 20% of the company. The second round of layoff is undisclosed. Quick question. First round of layoff was 20% of the company. How many people did they lay off?
2,000?
Wait, quick math. So they had 800 locations. So if, I don't know, a location has, let's say, 10 employees, that's 8,000 employees. And you said 20%? Yeah, I would also go. Did you say 2,000, Tom?
I did.
Yeah, I'll go with 1,600.
Prototyping with numbers. Alen Falic, thank you for sharing us. Well, it's 2,400.
Okay.
2,400. Meaning that they have 12,000 employees at this point in time.
Wow.
12,000. When I read this, I was like, I had to do the quick math because I was like, okay, 20%, 2,400, that is a lot of people. But yeah, also a lot of people got laid off. This was the first round. The second round, as I said, was undisclosed. They also closed a lot of unprofitable locations and really focused on locations and cities with high occupancy rates and enterprise clients. So they are basically repositioning themselves as a provider for remote and flexible work. And my guess is, if we didn't have COVID pandemic, we wouldn't have WeWork anymore.
So it saved them?
Yeah, I think it saved them.
Because of companies closing their big locations and moving to hybrid, right? I know a few companies in Brighton that are doing the same thing. They're coming to the end of a 10-year lease. They're getting like 5 members of staff in there a day. Like, we're paying hundreds of thousands. Let's get some passes for WeWork, Platform 9, whatever. Yeah.
I think they were somehow able to carry themselves through the first year of pandemic, and then that's the only reason why they're still alive. That's so that's just my when I read the whole story, why are they still alive, I didn't see anything that really changed. Like they're still renting out. They're just smaller. They're the same thing, just more real and smaller. So now they're saying that they're renting out spaces. They're not saying everything
But
else.
not much smaller. Like they still have, let me check, 780 locations. So
They do? I wasn't aware of that.
yeah, it's still huge operations in 39 countries. On the CEO front, did you know that they recently, he just left the company, and not just CEO, but also CFO. And one of my rules is when CFO leaves a company, don't just stay away. Because CFO is a person that usually knows the most about how bad or how good it is. And when CFO leaves on their own, it's usually a shit show. And that just happened, I think, a few weeks back.
Interesting.
Awesome.
Franz.
So I am
Awesome,
ready
yeah.
for quiz and numbers. So that was the 3 chapters. So my verdict is the only reason why they're still alive is COVID pandemic. And
I have
unlimited cash of this dude who runs the Vision Fund from SoftBank. I forgot his name. I think
Massa.
he just can't lose.
Yeah, I mean, he's got an enormous... If there's a poster boy for sunk cost fallacy, it's got to be that one, because they're never recouping all of that. Not anytime soon, surely. That's the amount of money that's been ploughed into that company. Like, you're right, as someone who does not want to admit defeat. But yeah, what an incredible story. What an incredible waste of money.
Total investment?
10 billion, more than 10 billion.
Yeah, somewhere I wrote it down. I think it was 14.2.
Yeah, crazy.
14.2 billion in a landlord company.
Yeah, well, a subletting company, really. I mean, the landlords are the ones that come out of this so well. So I think kind of going full circle around why they were able to explode in growth as well, and why it's such a good deal for landlords is, so WeWork don't own the buildings. They are leasing them for the 10, 15 years that someone else would be doing that. And those buildings, typically, if they've got 10 floors, that landlord needs to try and find 10 different big companies that are willing to go into a 10-year lease and all of that stuff. WeWork come along and say, we'll take it all, and you ain't got to worry about this for 10, 15 years. Maybe at a slight discount, you would assume, a fair discount. What a deal. Just sit on that forever. And then, it's the subletting that comes around that. But you can understand why the growth was so easy, because what a proposition to take to the people who actually own the real estate.
Right?
Developers, yeah. I haven't got to worry about this. And that,
well, maybe you do.
Maybe you do. Well, yes. Yeah. And they had to have that astronomic growth, didn't they? Because we touched on this already, and I think we'll probably touch on it again when we look at threats and whatnot. A very easy business model to copy. So go out there and saturate the competitive arena, right? Like, take this model and move as quickly as you can to own that space.
It is easy to copy model. I think the harder thing to copy is just the branding aspect of it. And also, let's say maybe they had the prime locations, and that is a bit maybe like harder to then have the same location or a similar one. But I agree, there is definitely products and companies that are easier to defend than WeWork.
Definitely.
My bigger question is, why would anyone want to copy this? And this is why I'm so I'm so interested in numbers now, because I know that there are bigger companies or other big companies who rent out offices, and I think obviously they are profitable, but I don't think that they are printing money. So
not profitable either anymore.
No,
right.
Not anymore.
I mean, I could, that's why I'm saying, I think, you can copy it, but why would you?
Yeah. Just as a side note, like, I had a couple of friends who wanted to move back home from Berlin to Slovenia here, and that there's no co-working space in their hometown, and they said, hey, let's maybe open up something quickly. And as in my good fashion, I was like, hey, let's quickly just prototype the numbers. So we went on like the first, real estate website. We found an interesting space. We put that under the costs. And then we said, okay, how many? And one of those two in that couple is an architect. So it was easy to ask him, hey, how many desks can we have in this space? And then we quickly calculated what is the revenue. And we did this for 3 different locations. And every time we had a loss, even before we started hiring people to run the space. And then I started to realize, well, there's so many co-working spaces that have closed already in their hometown, in the capital city, in everywhere I know. Like, maybe this isn't the best business. And then you hear about WeWork being valued at this number. It's just crazy. Like, did no one run like the numbers? It's really crazy.
I think it all comes back to Franz's sort of points about how they frame themselves, right, to be able to get to those figures, which, when we get into your comparisons, Alen, will be interesting. Well, let's have a quick quiz, and it's going to be a short one.
2 questions.
To Franz.
Usually it's the other way around.
I know.
Usually I'm like this when you do the company introduction,
I know.
because you take away the points.
It's worth us mentioning that even before we came on air, we always have a bit of a chuckle that Franz is worried that I'm going to kind of steal all his points in my introduction. So I don't think I did today, but he's repaid the favour by taking 2 of my quiz questions. So
you are welcome.
Yeah, cheers, man. Okay, so question 2. So quick quiz, just so that we cleanse our brains before we get into Alan's lovely numbers. So what did WeWork ban from all events and staff expense claims in 2018? Was it A, gas or petrol-powered vehicles or vehicle journeys? B, any meals containing any meat? Or C, alcohol?
When was that?
They banned 2018.
I would say B.
B.
That's my guess because of the Adam's wife. I think Rebecca, right? That's her name.
Franz?
Yeah, I think if it was today, I would say guess. But as it was 2018, I think it wasn't that. I also think it's meat.
It was meat products, yeah, and I think it was heavily
Really?
influenced by
They banned it from
rice.
all,
Banned them, yeah, cafes, cafeterias, they held. Well, I don't know if they still do this sort of staff festival that you had to pay for. Maybe they were trying to recoup some of the investment.
Staff had to pay
to
join?
to go to this like festival thing. It was like a few $100 to go to. It was crazy. But they.
So wait, my company organizes an event and I have to pay to go to
I know.
it?
Another one of these could it be true moments. But yeah, no meat. And this, weirdly, that was really controversial at the time. I remember it getting a lot of media coverage, a lot of like kickback. I think it would be less controversial now.
I think you wouldn't also frame it like this. I think you wouldn't say we're banning meat, but you would say, hey, we're going vegetarian.
Yes.
This is awesome.
Much better framing, Franz.
Yeah.
Where were you in their marketing team in 2018?
PR master.
Okay, so not that controversial anymore.
No. Final question, because we've already covered a few of them.
Already?
WeWork wasn't Adam Newman's first business venture. His second company was called Crawlers, with a K. What did they make? Was it A, baby clothes with knee pads built into them? B, industrial drones that could scale buildings as well as fly? Or C, smart climbing gloves? A, B, or C?
I think it's A. So, what was it?
Baby clothes
pads?
with knee pads built in.
Yeah,
Can
I think
add
baby.
one?
Go on,
Isn't
Franz.
Can we just say a web crawler? That would be too easy, right?
Oh, very good. No, that's not an answer. Where were you when I was brainstorming these ridiculous other options? No, it was A. Baby
Was it A?
clothes. Yeah, with knee pads built in.
Did
weirdly.
they sell? Was it this company that they sold, or was it the other co-working
They sold the
company that they
co-working
sold?
company.
Yeah.
Okay.
This company actually went on to become a company called Egg Baby that I believe he still has a stake in. They make like upscale baby and expectant parent apparel. So yeah, that's still going. But yeah, Knee pad. I mean, Alan, I think we can even pick up. There might be a toddler in the room with you there.
Yeah.
Does that sound like something?
Are
you
they
would,
wearing crawlers?
Are they got crawlers on?
No, and this definitely makes me think about their safety and if I should invest in the knee pads. Yeah.
Knee pads, shin pads, helmets for babies. But yeah,
Crazy.
so that's it.
Yeah, if anybody's audio is not as sensitive, we were hearing Alan's daughter in the background.
Yeah.
She was screaming out, "Daddy, Daddy, I need knee pads.
My knees are hurting.
My knees are hurting, and I really want to go to a co-working space." So yeah, that's it. That's our very, very short quiz for today. And Franz, we'll catch up before the next one about quiz questions. So we've touched on a few numbers today, some pretty mad ones that made lots of headlines back in the day. But Alan, pass over to you to take us into the detail a bit more.
Yeah, I think we have to start with the market cap today. So usually we start the numbers with the revenue of the company to see how big it is. But like here, the main headline is just how valuable the company is. So as Franz already mentioned, at the peak, the company was valued at $47 billion. So just as a reference, today, for example, July 5th, Uber is worth around $80 billion. And so for a company that raised $10 billion, being valued around 50 is not too bad. It's okay, not great either, but it's okay. But as Franz already said before, after the crash, the company went from 50 roughly billion valuation to $5 billion in valuation. Does anyone want to guess how valuable or not valuable the company is today? It is, Tom.
Yeah, go on. Today, because obviously there was the headline when they made the initial crash. It's got to have crept up a bit because it's been more profitable. 8 billion, something like that.
That's a good guess. 550 million.
Wow. Really?
Yes.
Jeez.
So it's 100x smaller. So this is the reverse VC world. So usually VC investors look for companies that can be returned 100x on their money, and this is exactly the opposite. So something valued at 50 billion now being valued at 550 million. And when I saw that number, and by the way, one stock costs 20 cents at the moment, just as an interesting fact. I was like, maybe today is going to be the first episode where I say, actually, we should buy because this seems to be really undervalued. But let's take this apart. Why is it only 550 million? Maybe first, I just want to touch upon why the company that was making only 2 billion in revenue in 2018-19, why was it valued at 50 billion? So the interesting thing is, in this stage, investors use something called multiples. So you apply a certain multiple to a company's revenue or a company's profitability to make a case, to make an estimate of how valuable the company it is. And different industries have different multiples. And the tech industry, for example, SaaS companies, software as a service companies, it's not uncommon to see 10x to 20x multiple of their revenue. But for real estate companies, that multiple is 1 to 3x. So huge difference, right? So if you can convince someone that this is not a pigeon, that it's a swan, you're gonna have much higher valuation. So yeah, from 2 billion revenue to 47 billion in valuation, that's 23x, which is crazy for essentially a real estate company. Can you hear my baby? She really wants those knee pads. Like, she got,
it's like that.
She
These
got
floors
excited.
are hard, man. Like, get me some knee pads.
Yeah. No. Daddy. Okay. So that's a crazy, crazy multiple. And that didn't make sense. And once they showed the numbers, that was kind of clear. But at the moment, the company, it's flipped because the revenue of the company at this stage, this year, 2022, they made 3.2 billion in revenue. Okay. And now it's only worth 550 million. Really? So why is this happening? It's happening because WeWork had 3.2 billion in revenue, but it also had still 2.3 billion in net loss. So still that ratio is pretty bad. And when you look at that, investors are asking themselves, are they gonna even survive? That's the bet at the moment. Is this company even gonna make it, or is it gonna just go under?
That's the loss currently.
Question. 2.3 billion.
So again, almost 1-to-1.
Okay, almost, yeah. Even though they're making all these restructurings and they're making like, basically now they have a little bit of wind in their, what's the analogy,
sales.
Tom? How
in their
sales, exactly.
Yeah.
Thanks. They have some wind in their sales. They still are struggling in bleeding cash. And let's compare these to their closest competitor, which is Regus. So Regus also has hundreds of locations around the world. I believe like 8,000 employees. So
I was in a Regus, by the way, coming back to Tom's question. And no offense, but there was nothing like selling community and fancy spaces.
Dead, man. Yeah.
That was crazy.
One we should get into, but yeah, that's... Sorry, you finish off about your comparison with IW. I think they're also known as IWG Group, right? So like
IWG,
Regus,
exactly.
Yeah.
Regus. And so their market cap, let's start with revenue. Their revenue is 3.4 billion. That's in 2022. And they also had a loss of $150 million. This is all US dollars. So even their closest competitor it's of a similar size, but it's just run much more rationally. It still had a loss last year. So it wasn't the best year for real estate in general. And it seems to be a growing trend. So I don't know if you've heard about the occupancy rate being record low in the SF. So the last data point is that 35% of all office real estate is empty. So 35% is a lot. So the usual number is 5% vacancy rate. And that's one of the main KPIs that you can use to compare or to see the strength of such companies. It's their occupancy rate. And in normal times, it should be around 90%, 90 or above. And
of these
WeWork is
leasing companies, co-working or office leasing companies.
All of these have a similar KPI. This specific number is applied to landlords, is applied to most co-working spaces, and to build to rent models. And just a reminder, in 2022, WeWork had 75% occupancy rate, which is almost as good as they had in 2018, which was 82%.
The Regus one is an interesting comparison because they have been profitable in the past. So everyone's suffering at the moment. But their valuation at the time that WeWork had that nearly 50 billion valuation was still only like 4 or 5 billion. And they had at that time like much higher sales, triple the amount of spaces, lots more desks. It just didn't make any sense. And I think this is what goes full circle to the kind of design element of this and the framing and the branding element of positioning yourself as a tech company, as this lifestyle game changer. They're very similar business models, but Regis were looking at this and going, I don't understand, like how the F are they getting to this number? And I watched an interview with their CEO, and he was like, we couldn't unpick what we were missing.
And I could just imagine those meetings. Like you are in the Regis C-suite meeting, and you're looking at those numbers, and you're probably spending a lot of money on consultants and stuff to try to understand what are they doing differently that we need to adopt. And you end up with like, we don't understand.
No.
And it must have felt so frustrating.
And frightening, probably, when you realise what the sort of the hockey stick kind of investment and physical growth that was going on, not necessarily revenue. Well, we know that wasn't the case. And again, coming back to the design element of it, you mentioned, Franz, you'd been to a Regis before. And ironically, there's one like 2 floors up from where my co-working is. And my co-working is really nice, nicely designed in that kind of WeWork model. You go to the Regis, very plain. There's no communal spaces. It's very much just boxes. But that's fine, because that obviously works for some people. They were profitable. There's a market for that. And, you know, that comes into a bigger discussion around where you fit in a competitive arena. So yeah, they were looking at this and going, I don't understand. How is this so different? And just to kind of wrap up on the Regis thing is, ironically, unsurprisingly, they have now ended up creating their own WeWork style business, which is Spaces, which I've worked at. We've got one in Brighton. I've worked out of those before, and that is very much more in that mold. But you pay for it. The difference between renting a Regis office and an office within a co-working space is, you know, it can be 2x the numbers. So yeah, very interesting.
That's basically it in terms of the numbers. I was trying to make the game of like, hey, which company has more like market cap? But in this neighborhood of 550 million, there weren't any other well-known companies that we could play with.
No.
Because this, I think once you reach below 3 billion, you kind of fall under a bucket of small cap companies.
Yeah.
And this is a bucket in its own. So yeah.
Interesting.
No game today.
Yeah, and there's no one at that scale. I wonder why. It's going to take a brave organisation to try and get to that kind of scale again, having seen the rework story, exactly. How that ended. So, as always, we wrap up these conversations by talking about kind of threats and opportunities for the company we're discussing. So, WeWork today. And then we kind of touch on whether we were bullish or bearish, would we be buying or selling. So maybe, Franz, you can start us off with the sort of threats and opportunities as you see them for WeWork moving forward. I think that says it all.
That's a super hard section for this one, because obviously I still think that these co-working companies, they can counter a downturn. So I think the fact that occupancy rates are so low for offices in cities does not necessarily tell that also co-working spaces are empty, but maybe even helps them, because it means that companies are actually shutting down offices. People will still have to work somewhere. They will not rent their own office, but they will go into co-working spaces. So I think this is co-working space is somewhat a counter recession product. If the general economy is doing worse, I think co-working spaces might actually be doing better, until people have to decide to work from home because they can't even afford a co-working space anymore. But I think to a certain extent it is recession proof. Apart from this, we already had this. For this, we would have to have a bigger or a closer look at their finances, like how much of their money currently is dependent on interest rates. Obviously, currently we had an interest rate hike. We have now reached a plateau. Maybe interest rates are falling again, but again, for a company in the real estate industry, rising interest rates are usually a big problem, unless again you're actually not having any funds that are bound to interest rates, and everything that you have is from SoftBank, and they're just waiting to get some money back. So I also don't think that interest rates are too huge of a threat here, but again, that's just me not being super informed about their finance structure. And in the end, I think the only thing that matters here is just, cutting costs or raising prices to somehow not let this company go under. And I think the only, apart from COVID, the only reason why this company is not already closed down is the sunk cost that already went into it.
Yeah, you think they'd be gone? Just dust.
I think they would already be gone if there wasn't this financial backing of somebody who cannot lose and who just wants to keep giving until something comes back. I think if this wasn't the case, the company would have been shut down already. And now hearing about current numbers from Alen, I don't see this happening anytime soon, because if a more budget conscious company like Regus isn't profitable yet, then how can WeWork be? So
yeah, not profitable at the moment, but yeah.
At the moment,
Yeah. Cool. We'll come back to, well, do you want to tell us whether you're buying or selling at the moment, Franz? I think
yeah,
you know the answer.
ignoring. I'm praying for them.
Alen, any thoughts on what could possibly turn things around for a WeWork, or is it a lost cause at this stage?
I think it's a really tough business model. Even when you make a really simple business case with simple furniture, things, because of the flexibility that's built into these memberships, it's just hard. Like the switching costs are not that big, so people can switch from being in a WeWork to working at home to something else. I just think it's a lost case, honestly. Like, I don't see a way out. Obviously, I don't know that much about the company, but if you just had a quick look at how much money they already lost, what was the investment that went into it, and what is the speed at which things are getting better, I don't see them making it out. Opportunity, yes. I think Franz touched upon the biggest opportunity, which is there is a more hybrid work, and then companies decide to buy people like passes. So if they can get their occupancy rates closer to 95%, then it could work. Especially it could work if they could revolutionize the business model and maybe have 120% occupancy rate. Then it gets interesting. So I think they don't have just a financial problem, they also have a business model / product problem. And what I mean with 120% occupancy rate is charge more people than you can actually fit in, because not everybody uses it.
Gyms,
so
right? Classic gym
exactly.
model, where you always try to have more people signed up to your gym than you can actually fit in at a time, because nobody
gym, aviation, a lot of companies, industries do that. So I think they need to also innovate on this side, and it sounds like now they're trying to be a good, solid company that does everything by the book, and because of the problems they're in, they probably need to do another big innovation to make it out.
Tough to do that over occupancy thing, which, like you say, would be an interesting route when you're trying to target big corporates, and when they pay for their co-working, it's in that more traditional vein of space rather than the hot desks. This has been fascinating, because I have full disclosure, co-working space is one of those like dream businesses for me. Like, if I was to leave design, for a lot of people it's running a coffee shop or something. I would love to start a co-working space for
equally bad businesses.
Oh man, yeah, tough business.
Both.
Like, but yeah, and I've done those back of the napkin sort of calculations before and come away going, nah, not for me. So it really makes me wonder. In Brighton in particular, we have got co-working spaces popping up all the time. One opened a few months ago and it's completely full. Another company called One Way East is opening here, and I just think, I'm kind of bullish on co-working in general, as Franz said, with how things have changed, but WeWork, not so much. Having been to some of them recently as well in London, I have clients that work out of them. They're looking tired and they're looking understaffed, and I think it's a real shame. But you go to some of the other competitors now, and they've probably learned the lessons from WeWork as far as their corporate structure and their cost base and all of that. They are better designed, better experiences. They have their unique flavor, and probably have got more chance of being sustainable. Some of those WeWorks are looking a little tired, but that's just anecdotal. Yeah. Cool.
No, but I think people equate busy with good business. Not every busy restaurant is a good business. Not every busy co-working space is a good business. And what I think a lot of these co-working spaces should start thinking about is, how is co-working space as a rent? So how is my rent not my main source of revenue? But how does it become the enabler of something else that I can do? Maybe it's, I mean, the first thought that I have is just like, maybe people start companies there, and because they start companies in a co-working space, you get some equity. Or maybe, I don't know, you have certain events, or maybe it's also like just being clear that this is not the best business, and we see that cities should invest in this. This is good for the development of the city, of this talent being closer together, blah blah blah, or something else. Because as a business, it's a really tricky one, and you need to do a lot of things right to get it profitable, and it's not easy to scale.
I did read that the desirable metrics are like 80% of your income coming from desks and space, and 20% from events and other services and things like that. But that needs to flip more probably towards the other direction.
Yeah, it's tricky.
Tough business. Restaurants, coffee shops, co-working.
Very tough.
Yeah, very hard.
Yeah,
nice one. That was really interesting. What a story, and what in such a short space of time as well.
You didn't tell us buying, selling, holding.
Oh,
by the way, this is informational and educational purposes only, not
always.
Investment advice.
Absolutely avoiding like the plague, I think, from an investment perspective. Other co-working space companies that I've seen, yeah, maybe, but yeah, not this one, and sadly not. We don't tend to come to the end of these feeling particularly bullish about anyone, do we? I don't know if that tells us a lot about the state of tech investing and VC lifestyles and lifestyle cycles and things, but
at least this was the first real teardown.
Yeah, proper teardown. Franz has been dying to do this. So,
yeah, we were always like everywhere. Every company was so neat and so all good and so successful. Yeah, maybe not buying them, but still. But now we were able to tear somebody down.
Yeah, Franz has finally managed to do that. One of many.
Franz's hobby. Tearing down.
Cool.
Crushing people's dreams through numbers.
Nice. Well, I think we're done then, unless anyone's got any final bits. I'll leave it to you, Alen, to wrap us up.
I think that's it. Maybe the next one is going to be more positive. Let's see. But it seems that designers love bad businesses. That's maybe a common theme that we are seeing now. But I think if we did Lululemon episode now, it would just seem, their business would seem completely different maybe than it did in the beginning, because also of the contrast that we have now with others. But yeah, dear listener, if you enjoyed this conversation, you will also enjoy our mini MBA, which is a simple 7-day email course where over 7 days you receive 7 emails, each of them teaching you a business concept that's relevant for designers. To sign up, head over to d.mba/mini MBA. So that's d.mba/mini MBA. And that is indeed everything in this episode, and see you in the next teardown. Thanks, Tom. Thanks, Franz.
Bye.
Bye-bye.
Thank you. Bye.